There's a very interesting change in the automobile market, and I'd like to draw a parallel here. The SUV market, it accounts for more than 50% of the total sales. The typical Maslow hierarchy in India was migration from cycle to motorcycle, motorcycle to a small car to an SUV. But the first time buyer is not buying a cycle, he's not buying the motorcycle, but he's buying a SUV. Is there a change in the way how patterns are emerging now?
Well, even today, in a lot of the motorcycle segments, almost 40 to 50% buyers are first-time buyers.
Okay.
You know, whether you're talking about the entry level or whether you're talking about the top end. So there is a lot of fresh influx, which is a very good thing. A very important contributory factor is the penetration of retail finance, which used to be a few years ago only 40%. But with all the digitization and all the initiatives of the government around Aadhaar and all that, the ability to take risk on credit has got vastly improved. And penetration of finance, retail finance is now almost 76% in motorcycles and 90% plus in three-wheelers, organized finance I'm talking about. So all this has facilitated a movement upwards because everyone, wants a better life, wants a better product, wants a better proposition. And that's and as soon as you combine that with purchasing power, whether through retail finance or directly money in the pocket, you see an uptrade trend which is there. And that is what is playing out even across the motorcycle industry. If you see if you divide the motorcycle industry into two halves, the 125cc and above and the 100cc segment. And if you rewind 5 years back, you will find that the 100cc segment 5 years back was almost 60% of the industry. Today, it is about 50%. And the 125cc plus segment was 40%. That has also become 50%. So this is just volumes in terms of margins and revenue. It is now the dominant share of the motorcycle industry. And that signals two things. One is that there is a upwardly mobile customer. And secondly, I would say that at the very bottom of the pyramid, that customer is very weakened after COVID. And they have not been able to come back to the consumption cycle. They are not still impacted by retail finance. Doesn't penetrate them. So that the very bottom of the motorcycle industry has fallen. What has gained is the middle and the top.
Okay. If I take the clock back 5 years ago, less than 10% of your total profits were coming from exports. That number is nearing 50% now, and 46% of the total top line, according to the last data, was coming from exports. That has worked like a charm for you. But have you reached a peak? Because you are there in almost 100 countries now. Your distribution network is set up. Those countries where you're present have the unique problems. So my point is that what has worked like a charm for you in terms of creating a leverage, in terms of giving you a fillip, has that edge now going to get blunted going forward?
Well, first of all, you are right. Almost half of our production is exported to over...
Which is a great strategy.
Thanks for that. To over 90 countries. We don't get into segmental level profits, so I will sort of skip that data point. But yes, exports is a very substantial part of our business, and it's reflected in everything which we do, whether it is in the people we deploy or in our product development strategies, etc. I think that the export opportunity is just unfolding.
Okay.
We are far from seeing it getting exhausted. Because of the same reasons which I sort of alluded to when we were talking about India. If you take a continent like Africa, Africa, the scope for the two-wheelers in parts of Latin America, parts of Africa is enormous. The story has just started over there. And the story is just one about good quality product being available for the African customers. The moment retail finance comes in, and there are countries like Uganda and Kenya, where retail finance, organized retail finance has made its appearance. When that lever steps in, we will see a jump shift in the expansion of business in Africa. And also in, I would say, in Latin America or the emerging markets of the world. So I would say that we are in a very fortunate position that we have got substantive positions in many, many, many countries. And as the macroeconomic issues and the clouds, the dark clouds sort of blow over, we will again see a growth prospect there. Now, having said all this, the nature of the international business is such that it is more volatile because, because of technological factor, because of macroeconomics, because of the geopolitics which is there, it's not going to be a linear growth. It's going to be a snake in the tunnel. It's going to be up and down and up and down. So it's not for participating in the international business, not for the faint-hearted. It is not for the trader. It is not for the person who is short-sighted. This is for manufacturers. This is for people who have a genuine commitment to a global play. And that is what Bajaj is all about. So I would say that the emerging markets story is far from exhausted. It holds a lot of potential still, and we are very optimistic about it. But we don't think it is going to sort of play out very rapidly. There are going to be ups and downs, and we will go through them.
So the down what you see in the last quarter, was that a one-off?
Well, the down cycle commenced really in the beginning of last year, which is FY23, and I would say April, May, June, when when there were changes which the Fed made, and the dollar became strong, and then there was weakening of a lot of emerging market currencies, which had two consequences. One was that there was devaluation in these countries, which meant there was inflationary pressures. And the second was that the central banks in these emerging markets took a very cautious position and started to preserve their dollars. And, so availability of dollars for international trade sort
of changed
reduced.
For you?
And that sort of set the whole cycle in the other direction. We are seeing some, let me say, bottoming out of this in the last 2-3 months, and now we are not seeing a rapid return to the period of FY21 and FY22 as yet. But as, like I said, the macroeconomics sorts itself out, and if there is no further geopolitical tension, because the fundamental drivers will start to kick in. And again, I think the pendulum here also hopefully will shift, but difficult to say exactly when that thing starts to gather pace.
Okay. So the domestic sales are coming back.